please explain to us how China could go from contraction to expansion in 1 month.
Okay, so I know the number about 50, right? But this is totally expected. PMI survey is a month-to-month comparison, right? So, over 50 means the industry activity is improving somewhat from February level, right? And then this shouldn't be surprising at all because in February, the Chinese economy is actually in a full stop. So it doesn't really take much to rise from such a low base, right? So, and I think to a certain extent, about 50 is well expected, but I was a little bit disappointed. It's only that the PMI is only about 2 to 3 points above 50, which means the rebound of March activity from February is rather modest, right? So part of that, I think, reflects the more gradual resumption of economic activity, especially in early part of March. And then I also think that reflects a lot about the deteriorating global economic outlook, as well as subdued domestic demand, especially in the consumer space.
Right. I just want to understand this from two other angles. One is we just had the central bank advisor in China say they're not going to put out a growth target for this year. That, right, on the one hand, sends a message that they're not very clear and certain about how economic activity would pan out through the course of the next few quarters, at a time when the March read has come in so positive. That's one. The other angle is the international trade angle, and we just had data come out of Japan where industrial output climbed 0.4%, which is fine. But a Japanese official was quoted as saying the main reasons behind the slowdown were factory closures and output disruptions in China. When the supply chain in and around the region is so disrupted, how is China managing to put its house in order so quickly?
Yeah, I think, to a certain extent, China used to have this, growth target around, 5 to 6%, that level. If they are, I think at this moment you are seeing significant, drag on the economy, right? Both from the global, recession. We are expecting a very deep global recession, in the first half of this year. And then, I think the Chinese economy was also getting quite a big hit, from this domestic outbreak, right? And, many people were expecting a V-shaped recovery. I think they are going to be disappointed because the negative shock on the domestic side is going to persist for a while, and you are going to see more downbeat, demand from the global side. So I think, the downside risk is too much. The policymaker, they just cannot afford to come out too much stimulus package to bring the growth back to the previous target. So I would say they probably are ready to accept a lower growth trajectory down the road and to recognize that, as long as we have some stability in the society, social stability, and, that's probably what the Chinese policymaker cares the most rather than just a growth number.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.